We're going to buy a call option in this course and look at Chipotle Mexican Grill. So Chipotle Mexican Grill is my candidate for the long call. So this is a 1 year chart of Chipotle. And you can see that it's been moving up nicely. And what's happened is it hit a high of 442. And then we had earnings here about a couple of weeks ago. And Chipotle reported good earnings. But however, what's happened is because of some market pressures and perhaps it had gone up too much, Chipotle has come down by $40. So I think this is a good point to get back into Chipotle. With these positions, what we're going to do is manage these positions in such a manner that over the next 3 to 4 weeks, we'll see how these positions play out. Now, also, one other important thing is, now at many times, you might want to take profits off the table. So if your position has done well, then you want to take some part of the profits off the table. Or what you can do is, if your stock is not doing well, if it's going against you, then you need to make an adjustment to it. But in general, if you have a certain profit target or a certain time target, if the position meets either one of those, then you should take your profit. Maybe not close out the whole position, but certainly half of the position so you can book that profit and go from there. So we'll be looking at all these different kinds of things. But many times, if a position actually goes clearly in your favor, it may be time to take it off. So we'll see how all this plays out. But for Chipotle, I want to go into the let's go into the trade tab for Chipotle, and I want to go into the June options that have 37 days. 37 days is a little less. Let's go into the September is too far, but let's see how much. Yeah, these options are expensive. So let's just go into the June series. And what we want to do, it's currently around $400. So my feeling is that if we can buy something at the 440, 430 or 440, that might be a good place to be. So let me put the deltas and see what deltas are looking like. I want to get at least a 25 delta. So we have the 430 call, and that's about a 25 delta. Or we have almost a 30 delta on the 425. So actually, this looks pretty good. I want to get a slightly higher delta because we have only 37 days left to expiry. So we'll take the 425 call, and if Chipotle starts moving up, then our position should go up. So for this call option, we're going to buy 10 contracts. Let me close this up. We're going to buy 10 contracts of the June 425 call. And what we'll do is put this order in, and let's see if we get filled on that. And we did. So we've got 10 contracts of Chipotle. Now what we're going to do is just monitor this on a daily basis or whatever. We'll come back and see how these positions are doing. Let's just take a look at the graph for Chipotle, the P&L diagram. So we bought the call at 425. So you can see that the red line changes direction exactly at 425. So whenever it changes directions, we know that we have a strike price there, and that's exactly what we have. We have a strike price at 425, and we paid $6.10 for this trade. We bought 10 options, so 10 contracts. So what we did was we paid $6,100. So that's going to be our maximum loss. So even if Chipotle crashes all the way to 300, our maximum loss on this trade is going to be $6,100. But let's see how it goes, because from now what we're looking at is the white line. That's our real-time line. And if Chipotle starts going up, we can make a nice profit. You can see that even if Chipotle goes up to about 410 from here, we have a profit of $2,400. On the other hand, if it goes down, we'll have a loss. But if it goes down, then we're going to have to do something. We're going to have to adjust it. You have to decide at what point you would want to adjust it if it starts going down. So maybe your pain point is perhaps $1,000. So if it goes down by but you also have to give it enough room. So if you see Chipotle is at 403 right now. So you have to give Chipotle enough room so that you're not over trading or over adjusting your position. So I would say if it comes to 395 might be a good point to adjust this. So if you're going down $1,800 on this trade, then it would be time to adjust Chipotle and see what we can do. There are many options to adjust it. Granted, at that point you're looking at a paper loss of about $1,800, but you have to decide. The primary thing you have to decide is whether your outlook has changed for Chipotle. You are now bullish by taking a long call position. You're now bullish, but you also have to see if it starts going down further. You have to also look at what the overall market is doing. But otherwise, the Chipotle long call trade looks good. We're going to set a adjustment point at 395 and say if it goes below 395, then we're going to have to adjust this position. But otherwise, on the upside, we have actually unlimited profits as long as Chipotle continues to go up. But we also have to make sure that we don't take too much time on this trade, because it's got only 37 days left to expiry, and the next month series is not opened yet. So we'll see how it goes. I think this is something we can play for the next 2 weeks or 3 weeks, and we'll see how the profit situation develops and take action as required. So we'll come back to it and visit it in a couple of days. Welcome to the Chipotle Mexican Grill trade. Today is May 11th. And we can see that Chipotle has made a really nice move. I think we put the trade on when Chipotle was around 402. And what's happened is Chipotle has gone on a nice move upward. So let's take a look at Chipotle's chart. And this is what we can see. Yeah, I think we put the trade around here. Around 402. So it was right here, and then it started to turn around, and now we are on an upward graph. We've got a long call. Let's go take a look at what that call is all about. It's a 425 call in the June series, and it's got 35 days to expiry. And we bought this option for $6.10, and we got 10 contracts, so that's 1,000 shares. So we paid $6,100 for it. And today its market value is $8.05 per share. So you can see our net liquidating position is 8,050. So we paid 6,100. Now we can sell it for 8,050. That's a great profit. Today itself we've seen a profit of 1,400. So Chipotle has gone up really nicely today. But our total profit on this position is 1,950. So again, what do? My outlook is still bullish, but we have a great profit. And to understand what we should do, we have to look at our position. So if you recall, we chose an expiry date which was not too far away. It had only about 38 days left to expiry. Now a few days have gone by. We've got a good profit. Now in the last 30 to 45 days is when you're going to see a lot of time decay. So you can see on this one, the theta is a negative $178, $180. And this theta value is going to accelerate. So tomorrow it might be 185, day after it might be 195. And then as you get in closer and closer to expiry, your time decay is going to become exponential. And in the meanwhile, if Chipotle makes a turn back, then you're giving up your profits on this trade. So right now, look at the profits. It's almost $2,000, and we put out a capital of $6,000 on this trade. So the your profit as a percentage of your capital is 33% almost. So that's 33% in a few days. That's a great return. So you were expecting a bullish move. We went in for the long call, and the trade worked out in our favor. It's very possible that over the next few days, Chipotle might either come down, or we are going to be looking at an accelerating time decay. So overall, it doesn't make sense to take that kind of a risk anymore, because bear in mind, when we take up a long call or a long put, we generally wanted to put at least 60 to 90 days into the trade. but Chipotle didn't have a lot of the months of options opened up yet, and therefore we went in for the June. And because we did that, we have to be watchful, we have to be mindful of the fact that time decay is going to be working against us. So, given all those situations, and we are going to close out this trade. Normally, what we could have done if we had much more time left on this option is to book half of this profit. So instead of selling all 10 contracts, we would sell 5 contracts and let the other 5 contracts run and see if we can pick up a little bit more of a profit. But because of the conditions of the trade, in this particular case, we are entering into the last month, so it doesn't make sense to keep it on anymore, especially because we've made a 33% return in a few days. So that's the Chipotle trade. We're going to close it out. We got the move we're looking for. And this is a good thing with options. You can see all that Chipotle did was make a move from 403 to 411. So that's only about $8. And we can see that we made a profit of $2,000 just on that move. And as a percentage of your capital, that's a 33% return in a few days. So that's a fantastic move. You do want to take these profits at opportune times. And like I said, if it was a longer term option, we could have let half the position run for some more time. But in this case, because of time decay, we're going to close out this position. In the next lecture, we want to put a long put, and the candidate that we have is the FXE, the Euro ETF, and we'll put that trade on in the next lecture.